Well, I think you're right on the money there. I think we're definitely seeing a swing of sentiment on risk on, risk off. And just as you mentioned about the euro US dollar, we've certainly seen a lot of weakness coming out in the dollar. Now, we expect the dollar to get weaker, much weaker than what it is right now. But in the short term, yes, absolutely. We've definitely seen some momentum in the bearish move on the euro, breaking through that support level that I think is pretty key, around about that 1.0855 level. And so my focus is, yes, JPY weakness, dollar weakness, also looking at slight euro weakness, and then also looking at Swiss weakness as well, which is pretty much what I need because I'm long on CAD Swiss as well as Euro Swiss. So this is pretty good for me.
Gary, you might like this. I've got a long position on Euro Swiss franc, and part of the reason for that is it's not purely based on technicals. It's actually just before you stepped on, I was talking a little bit about the COT data, and to your Euro Swiss idea, I have a very small position, and believe it or not, I have a dollar cost approach that I'm using, which you might love. I know it's a little different than usual, but I'm actually long Euro Swiss as well. And one thing I want to point out about that currency pair that I found kind of interesting is that the euro has a very high demand in terms of COT data. What we're looking at, this is the net positioning. For those of you guys in the audience who are not familiar with the COT report, this is the net positioning of hedge funds, speculators, large speculators in the market that have to report to the CFTC. We have that data here, and what we're seeing is that the euro is sort of a favorite. At this point, let's see what the percentage is. It's a 76% long ratio relative to the Swiss franc, which at the Swiss franc level, we have the opposite. We have 62% short ratio. So a lot of shorts on the Swiss franc, a lot of longs on the euro here. So when picking a currency pair, I was looking at this one specifically. So I'd love to get your take on Euro Swiss franc. You've got your chart pulled up. That would be awesome to see what you think there in terms of technical breakdowns.
Yes. So I agree with you that you've got that sort of scale on the buyers and sellers for the different currencies, and certainly we've seen that in the technicals.
Do you have any questions about any of our products or services? Right now, members of the A1 Trading team are standing by, waiting to assist you. You can head over to our website, a1trading.com, and click the icon in the bottom right-hand corner to chat with one of our team members live. You can also go to a1trading.com/contact and fill out the Contact Us form, and someone will get back to you shortly. We have our helpful and friendly members of our support staff ready to chat with you anytime Monday through Friday from 9 a.m. to 5 p.m. Eastern Time. So what are you waiting for? If you have any questions, feel free to chat with us live right now on the A1 Trading website.
Your data reports exactly what I'm seeing in the technicals, because right now, and that's actually pretty cool that you've got that, because that really helps traders that don't really have a sort of a good idea on their technical side to be able to have that extra support in the sense of looking at your data, and then using that data to be able to define which direction to trade. And if you take that data and you look at the chart right here, we can see that we're at this key level of support here on this daily time frame. Key level of support. We've got a falling wedge taking place right here at that support level, and now we're getting that little bounce. We've got an oversold condition right here. So everything's moving, or at least lining up for upside move. I think we're even got some slight bit of bullish divergence here as well, also indicating a rally. Now, we're definitely not out of the woods. I'm long on Euro Swiss, but it's certainly not at a place where I'm excited about until we break through this downward trend line. Once we break through the downward trend line, we know that the price normally chases after the top of that falling wedge, which is right up top here. So once we get a clean break over here of this downward trend line, and we see a nice clean break of this wedge, we know that there is a lot more upside potential on this particular setup, and that would be a good place to start looking to add on to that position. So adding on to a winning position, which means that the market goes up, any dips, you're going to go ahead and want to get in on those dips as the market continues to rally up towards this target up here at the top. So I like the setup. I like the way it's all pointing in one direction, and I think the data is also showing the same sort of direction as well, which is great.
Yeah, it is. The COT definitely adds a nice little level of confluence there. But I was just about to ask you, in terms of targets, where you see the Euro Swiss going if we do in fact catch a rally off that longer term support. As you mentioned, off of the daily chart, we've got that big strong support long term at 97.30. Let's call it just about that area. That seems to be an interesting sort of decision point for the Euro Swiss. And if it does rotate, to your point there, buying pullbacks, rips, it has a lot of room to expand higher if that support level does decide to hold, if we start to see a pivot, and perhaps that commitment of traders data, if institutional money ends up being right on the money on that one, it has a lot of room to expand higher.
Yep. And also, if you take a look at the Fibonacci level from that last swing going down, we're actually at that 1.27 right here. And this is also a very key. We actually thought we were going to have an earlier bounce when it came up to the 1.27 and bounced up north, but it failed to break above that level. And then we went ahead and looked at the swing structure, and we realized, okay, we need to have a 5-wave structure right here. So which means that this last dip that we saw right here was necessary in order for this falling wedge to complete itself. And so I think that this is definitely, I know that picking bottoms and tops is frowned upon, but I'm like that trader. I get a lot of that. But I see definitely a bottom right here on the Euro Swiss. I think this way it's all the way up. And I think with all the central banks looking to raise rates over the last 6 months, I think it's coming to a point where now they holding off a little bit and they starting to think twice about raising rates. Inflation reports starting to come down a little bit, and I think the US is also afraid of what they're doing to the banking sector as well. So there's a lot of concern about just raising rates, trying to combat inflation.
Yeah, no, that's definitely been a theme, and I think that we talked a little bit briefly about the dollar, and I'd love to ask you a little bit more about that, because the dollar, right, to your point that you just made there, inflation has been, in the most recent reporting even, it's been showing signs of cooling, both on the producer price index and the consumer price index. We saw those numbers fall by a greater, or not fall, but the inflation growth was much slower than expected compared to forecasts. So I think that, you have this debt ceiling concern for the dollar right now. A lot of people worried about that, the market sort of reacting to that. I've made the point, and I'll be proven right or wrong about this, of course, as always. I've been, as you know, Gary, when you're in the hot seat like this, you're right sometimes, you're wrong sometimes. I've thrown it out there that I think personally the debt ceiling situation will come and go as a fear, as they always do. They'll make it dramatic. Everybody will get all stewed up about it, and then they'll come to some sort of compromise, and the markets will forget about it. And then what? Well, then we're going to be left with the exact point that you're making, I think, where you have these cooling inflation levels, and the Fed and the ECB at Bank of England, they don't want to break anything. They don't want to destroy their economy. So there may be that room for interest rates to then calm down, or potentially, as the market seems to be forecasting, potentially even be cut by the end of this year. So I think it's a really interesting story on the dollar.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.